In 2020, a regular Reddit post caught everyone's attention. It suggested a way for ordinary people to make big profits by investing in a struggling company's stock. The internet rallied together, and soon hedge funds were losing massive amounts of money. However, the popular trading app, ironically named Robinhood, suddenly banned the purchase of that particular stock, causing chaos. People began wondering who was behind all this, the possible puppet master. The main suspect was Ken Griffin, a master in the financial world, known for his powerful hedge fund, Citadel. Ken Griffin has the ability to manipulate markets in his favor, running a $30 billion hedge fund and the world's largest market maker. The question arises, how can one person have so much influence and control over the fate of the markets? To understand this, let's go back to Ken Griffin's beginnings. Born in 1968 in Florida, he grew up in a wealthy environment with a goal to make a lot of money. Seeing IBM's dominance in computers, he taught himself programming in high school and even ran an education software firm from his bedroom. Griffin entered Harvard in 1986 with dreams of conquering Wall Street. Initially aiming to be a banker, Griffin changed course after stumbling upon a Forbes article that shifted his focus. Leveraged buyouts were trending, and he decided to dive into the financial world, setting the stage for his future success. The article suggests that the home shopping network stock is priced too high, and Ken Griffin agrees with this assessment. To take advantage of the situation, he opens his first brokerage account and buys put options. However, when he sells these options, he realizes that his profit is not as much as he expected. Confused, he asks his broker for an explanation, and he learns about the bid-ask spread on Wall Street. Griffin becomes frustrated because someone else is making risk-free gains while his profits are lower than anticipated. In response, he immerses himself in the library, spending hours studying financial theories. During this time, as he flips through the Standard & Poor's stock guide, he discovers a hidden treasure that captures his attention. Ken Griffin discovers the lesser-known convertible bond market and notices something strange when comparing stock and convertible bond prices. Unable to make sense of it, he contacts the local office of First Boston Corp for answers. Surprisingly, they admit to using this unconventional strategy themselves to make money. During the summer break, Griffin discusses his trading theories with a broker friend, attracting the attention of a wealthy retiree named Saul Goen. Goen, intrigued by Griffin's ideas, decides to invest $50,000, kickstarting Griffin's venture. Griffin manages to raise a total of $265,000 for a limited partnership named Convertible Hedge Fund Number 1, even convincing his grandmother to be a limited partner. However, challenges arise for Griffin as the stock market faces a severe crash in the fall of 1987, known as the Monday Massacre. Griffin finds himself in a race against time, navigating the worst drop in Wall Street history. The market experiences waves of selling panic, creating a challenging environment for Griffin and his newly formed hedge fund. In 1987, the infamous Black Monday shook the stock market, with the Dow plunging by a staggering 22.6% on October 19th. Ken Griffin, needing real-time stock quotes to navigate the chaos, faces a hurdle as his university has strict policies against students running businesses on campus. Undeterred, Griffin convinces authorities that his fund qualifies as an off-campus activity and installs a satellite dish outside his window just in time. Trading convertible bonds from his dorm room, Griffin, armed with his investment fund and strategic short positions, confronts the market head-on during the chaos. While other hedge fund managers suffer losses, Griffin not only emerges unscathed, but also makes substantial gains. His success spreads widely, gaining him confidence and support from investors, allowing him to raise an impressive $750,000 for his next venture, Convertible Hedge Fund Number 2. With enough credits to graduate early, Griffin contemplates joining the Palm Beach 3 Fund, but decides to maintain his independence. Introduced to Frank Meyer by Ted Adams, Griffin receives $1 million from Meyer and achieves a remarkable one-year return of 70%. Meyer helps Griffin raise $4.6 million to start his own hedge fund, marking the birth of Citadel, one of the most legendary hedge funds globally. The story catches the attention of the New York Times, highlighting Griffin's impressive journey from trading out of his dorm room to founding one of the most renowned hedge funds. Citadel Investment Group experiences a remarkable ascent to success, particularly in acquiring distressed assets. In the following years, Ken Griffin's funds achieved impressive returns, with a 43% increase in 1991 and a 40% rise in 1992. Moving into the early 2000s, Griffin establishes the market maker Citadel Securities, marking a fitting evolution for someone who once dealt with frustration over the bid-ask spread eating into his profits. In 2002, a significant event occurred with the collapse of Enron. Citadel seizes this moment of vulnerability in the energy market, quickly recruiting a team of former Enron traders. By 2003, at just 34 years old, Ken Griffin became the youngest member of Forbes 400, boasting a net worth of $650 million. The world witnesses the ascent of a true financial titan. However, lurking in the shadows is an impending market crash that threatens to push Citadel to the edge of collapse in the mid-2000s. The fate of Citadel's assets becomes uncertain as the financial landscape faces challenges during this period. Citadel Investment Group reaches its peak with assets totaling $20 billion. However, the year 2008 marks one of the world's largest market crashes amid the economic crisis, triggered by the collapse of Bear Stearns and Lehman Brothers. Citadel faces a financial crisis as convertible bonds freeze and its assets plummet. In response to the dire situation, Ken Griffin takes a drastic step by implementing gates, preventing investors from withdrawing their money. Unfortunately, excessive leverage only worsens the losses, with Citadel's two largest funds experiencing a 55% decline by the end of the year. Despite the challenges faced during the economic downturn from 2001 to 2007, Citadel finds itself in a tough spot. Despite the scars of 2008, Citadel harbors a secret strategy that is about to transform it into an unstoppable force, surpassing anyone's expectations. The story takes an unexpected turn as Citadel navigates through the financial turmoil and prepares for a resurgence that will solidify its status as a dominant player in the market. In 2018, under Ken Griffin's leadership, Citadel Investment Group recruited a team of brilliant scientists and analysts with advanced weather forecasts. This strategic move becomes a crucial part of their ambitious plan to expand their $54 billion empire into the vast realm of commodities, covering futures to physical trading. This bold bet on raw materials proves successful, making Citadel one of the most powerful hedge funds in existence. Fast forward to the GameStop saga in 2021, where Citadel faces a notable challenge. GameStop, a company facing financial difficulties, becomes the center of attention. Hedge funds, anticipating its bankruptcy, heavily bet against its stock, expecting its price to drop to zero. However, a Reddit post titled "Bankrupting Institutional Investors for Dummies" outlines a plan for individual investors to drive up GameStop's stock price, causing massive losses for the hedge funds. As retail investors start buying GameStop shares, its value skyrockets by a mind-blowing 2,000%. Hedge funds find themselves in dire straits, losing billions. Melvin Capital, one of the funds, faces such severe losses that it requires a massive $2.75 billion bailout from Citadel to survive. However, on January 28th, a twist occurs as the Robinhood trading app bans the purchase of GameStop stock, citing insufficient collateral. Allegations of market manipulation arise, with suspicions pointing towards Citadel Securities and Ken Griffin's involvement. This leads to a congressional hearing by the U.S. House Committee on Financial Services. Despite the controversies and obstacles, Ken Griffin continues to navigate challenges. Citadel Securities becomes entangled in a payment for order flow controversy with Robinhood, but Griffin vehemently denies all allegations. Amidst the chaos, Ken Griffin seizes opportunities, capitalizing on the war in Ukraine and amassing a staggering $16 billion in profit in 2022. In the midst of the chaotic events of the last year, Russia's aggression towards Ukraine deeply impacts the markets. Concerns about sanctions and energy shortages are rising, leading to a surge in prices in March and unprecedented heights in August. Citadel, having been in the commodities business for over a decade and hiring former Enron traders in 2002, seizes a golden opportunity. As COVID-19 restrictions ease and Russia invades Ukraine, the gas market springs to life. The unpredictable price movements create numerous chances for profitable trading, and Citadel, with its experienced team, is perfectly positioned to capitalize on the situation. The firm's experts track and analyze natural gas supply, accessing prices from different locations. However, the real challenge lies in predicting the precise amount of gas people will need. Citadel's weather forecast team, equipped with powerful computers, specializes in predicting weather events like thunderstorms and tropical cyclones. They provide crucial information to Citadel's traders, combining their expertise with precise weather forecasts to yield billions in profits. Citadel amassed an astonishing $16 billion, surpassing Bridgewater and becoming the most successful hedge fund in history. While the financial world applauds Citadel's success, questions linger about the GameStop controversy. Many wonder if Ken Griffin, Citadel's leader, orchestrated the events and whether his billions are truly earned through market manipulation. The mystery surrounding Citadel's strategies and Griffin's involvement adds intrigue to the financial landscape. The question of whether Ken Griffin was the mastermind behind the GameStop saga remains a topic of debate. Citadel, under investigation by the SEC for its alleged involvement, maintains innocence, asserting no violation of laws. The SEC's findings are pending, and charges are uncertain. This episode raises crucial questions about the influence of Wall Street firms on stock prices and the fairness of financial markets for retail investors. While the resolution remains uncertain, one central figure stands at its center: Ken Griffin. His motives, actions, and the aftermath leave a lasting impact on the financial world, prompting lingering questions about power dynamics in modern financial markets. This story serves as a reminder of the complexities and potential imbalances in the financial system, sparking discussions about accountability and transparency in the world of finance. If you found this video informative, don't forget to like, share, and subscribe. Keep the conversation going in the comment section below. Stay informed, stay engaged, and until next time, take care.